Okay, very good afternoon here on the 24th of May 2019. Rishi Patel, co-founder, Master the Markets, the Elite Traders Conference, and the Traders Open Day. And it is a pleasure to be in the weekly market roundup once again. Title of the weekly market roundup this week, as you can see just there, is market update 24th, 2019, minus 1.2%, and position sizing tips. And the reason I wanted to just go over some position sizing tips, common thing that's coming up in the coaching sessions is occasionally we're getting the position sizing slightly wrong, and I want to make sure that we can really nab that. So I've got a couple of tips that we can use to get a little more consistent with that. So let's go over the results for the week thus far. So we're not an ideal week here in the live trading room, or the elite room actually. We have finished net down just slightly. One of the things that you can see as a common theme with our market updates is that where we finish with a losing week, it is a very small losing week. It is just next to nothing in terms of a loss, which is exactly where we want to be. Tells us that we're navigating these very volatile markets with a great deal of precision, which is really ideal. And of course, when those strategies turn, because of the nature of them, especially the elite strategies, when they turn, they will make anything between 4 and 7 to 8% in a single trade, which would reverse all of our losses for the past months and take us towards net profit. And that's exactly what we can see not only in the elite room but then in the live trading room as well. So with that said, let us now commence by looking at a review of the opportunities from the week so far. Let's have a look at what's happening. We have a couple of running trades here in the live trading room first of all. So one of the running trades we have at the moment is the pound dollar. We're currently long on the pound dollar. A counter trend trade, you can see there, after an efficient move here just on the pound dollar. This move, in terms of its efficiency, if you look at it on the efficiency ratio, Kaufman's efficiency ratio, this has a ratio of 1, which is a very efficient move. Now what we're seeing here at the moment is very much the first interruption in that move so far, and we have a primary bar setting up today. It is a little dangerous to take a trade like this long, in the sense that that has a lot of momentum, that current top to bottom phase. And so for us to be taking a new move here long, predicting this phase to be predicting this bar to be the turning point, just this bar here, the PSWB, quite ballsy, but that's what the money bar strategy tells us to do. So we have an open trade running on that at this time. It is a slight net profit, nothing to shout home about, but we are up on that one regardless. Let's continue to monitor that over the next couple of days. We'll set the target on that this weekend for Monday. Let's go over to another open trade as well, which isn't open actually, which is a pending order, which is this dollar yen, which looks like it may become invalid over the next couple of days because it's very much on the move. So we put in a limit order on the dollar Japanese yen. You can see that just there. We did put in a limit order at around about that level, 110.01, which hasn't triggered today thus far. You can see the move, the stretch that was made here at this time on this dollar yen to the upside was 20 pips. We wanted it to get back up to here, which is quite a significant move. I mean, that's a 45 pip move we're looking for just there. Hasn't come back yet. It is turned around and gone down. We have actually caught this on the elite room in the smart money trading strategy, so they got in a little earlier than us in the live trading room, and so they are short on the dollar yen currently. I'll come back to that later, but for ourselves, we're still keeping the order in place at the moment. It's not invalid yet, but we'll advise in the live trading room over the next couple of days if we're going to hold that limit order on or not. Let me go over then to the close trades for the week. So the only close trade for the week in the live trading room was a minus 0.58% loss on this dollar Swiss franc. We opened a lift-off opportunity on the high of this bar just here, this one just here. This is RIB -1. We opened long just there, you can see, with our initial stop in place underneath this IB minus 1 bar. As soon as we saw the reversal primary kick into play, we quickly moved our stop from there to there, and we were out on our trailing stop, so a minus 0.58% loss as well. Similar trade on the Elite Room. They also did something similar to us as well, so they also trailed stop just there at this time. So they also took a loss on the dollar Swiss on smart money for minus 0.62%. So in total, a loss on the dollar Swiss this week of minus 1.2%, constituting the entire closed P&L for the week just on the dollar Swiss there, which is the only trade that has closed. So on the Elite Room, the current running trades that are open, of course, are the what do we have? So we are long Aussie dollar just there. So we're long the Aussie dollar. We entered the market long on the swing profit strategy, which was actually on the close of this bar just here. A nice tight stop on the market in the Elite Room of around about here. So we're still in that trade. We are long our target. I believe we're around about 15 pips away from at this time. I believe our target is around here, 6940. In fact, let's not guess. I've got the journal open, and we can actually look at their exact opportunity that is running. There it is, Aussie dollar. The current target is 6935 is the target. 6935 the target, which is there. So 6935. So currently we are 19 pips away from hitting that. Let's see if we can get that opportunity on the Elite Room, and that should take us out for a profit of 2%, just there, 2.08, which would be a nice way to finish the week. We'd finish net up instead of the minus 1.6 down. Okay, so that's the Aussie dollar. We're running also the smart money dollar yen trade as well. That's also open in the market at this time as well. So those are the two trades running on the Elite Room. That's pretty much it for closed trades and running trades. Let us now quickly go on to the topic of the week this week, which is all around position sizing. So let's go over 3 tips on how we can position size more effectively. Okay, so let's go over tip number 1 for position sizing effectively. So I would say that the first tip is, if whatever trade risk you're using, what I would do is knock a 10% off of it. So that basically means to say that if you're using a 1% account risk, then what I would do is, instead of using 1%, use 0.9%. And the reason that I say that, let me draw my 9 out better. So 0.9%. And the reason that I would say that as a slight tip is because we want to accommodate for a couple of unseen variables, or sometimes they're unseen. So first of all, one of them, of course, is swap charges. So you'll see swap charges taking place pretty regularly on the trading account. The other one is slippage as well. So I'm slipped pretty regularly by my broker when placing trades. And so that can also act against you as well. So if the trade does come down against you, you're actually exposed to more than 1% risk if you've risked 1%. So one of the things I would do is just drop the position sizing down by 10%. In this case, 10% is 0.1, so I would risk 0.9%. If, for example, you're using a 2% risk on every trade, then you can bring your position size down to 1.8 is another way of doing it just there as well. So instead of using 2%, you use 1.8%, so 10% again knocked off there to 0.2%. That will keep the losses tidy, because we remember, the main goal of our trading is to keep our losses small, and we know for a fact we are going to incur losses. So when we incur them, we need to keep them small and tidy. If we can do that, then we put ourselves actually into a very effective place just there. So let's keep our losses tidy by using a slightly smaller risk than we would need. So let's go over an example of that just here. So let's say for this Aussie dollar, I wanted to enter on the close of this seller bar just here, and I want to enter long. So the close of this seller bar is 6882 rounded up. So 6882 is actually there, and the stop loss I want to use 2 pips below the low of this bar, 6861. 6861 is this level just here. So 6861 is that level just there. So there you go, 6861, and that's level. That's that level just there. And the key and the main thing behind making this happen is the fact that I want to now size up how big these number of pips are, and then let's look at an example of how we're going to size this. So here I have, let's do an exact calculation, in fact a mathematical calculation. So 6882, take away the 6861, okay, that's 21 pips of trade risk. So let's go ahead and make a note here. So the trade risk is 21. Okay, so if we were taking that at a 1% risk, and if we're taking that at a 0.9% risk, what does that actually look like? So let's go over to that, and for me to show you that, I'm going to show you tip number 2, which is to use MyFXBook as a position size calculator. Okay, so this is a really great tip that you can follow. You can use the MyFXBook position size calculator to size up your trades, and the reason that I do that is because what it does is it gives you a bid and an ask price immediately. Okay, so let's say for example we are running with a 250,000 euro account using a 1% trade risk, and 21 pips of risk is what we have on the Aussie US dollar. So that would basically mean if we were using a 1% risk, our position size would be 13.3 lots. Okay, so 13.3 lots would be our position size on 1%. But now if I were to risk just 0.9%, and I change this here, you can clearly see that the position size reduces down quite a bit, down to just 12 lots. That's quite a significant difference, and what that's going to allow me to do is when I buy this Aussie dollar long, any swap charges that I have to pay, commissions that I incur, anything like that, if the trade were to move against me, then I would be able to cover most of those fees within a 1% account risk. So it really depends on your risk appetite, but for myself, I like to keep my losses tidy and within the 1% total, you know, for all of the losses that I incur. So things like swap and slippage, and any other fees that I am having to pay there as well. I'd like to keep it within that 1%. So that is a way that you can do that. So just using 0.9% risk instead of 1%. And the second tip, you can see how useful that was, the MyFXBook position size calculator. The reason that it's useful, better than the previous calculators I've used, is because it actually automatically fills this in for you, which is the current Euro USD ask price. In the past we had to go and input that information manually, but it's pulling the live rates for us, and so it's giving us an accurate figure without us having to input it. We just need to fill in these 5 boxes: the currency we're trading with, the currency our trading account is in, the amount of money in our trading account, the risk that we're using in the percentage, the number of pips at risk, and the currency. And that's it. That will give you the actual position size in lots and units. So depending whichever one your broker wants you to input, you can input just there straight into the brokerage. So that's the idea on position size. That's the second tip. Now my third tip is moving away from most of what I've shown you so far, and it's all around money management, and specific part of money management, the drawdown. Okay, so you may want to limit yourself by saying that if I reach a drawdown on all the trading strategies that I'm trading of, let's say 10%, if I reach a minus 10%, then I will reduce my percentage risk down to, instead of a 1% risk, I'll use a 0.5% risk until I pick up the account back to, let's say, minus 7.5% loss. So we make a pullback there, and then we can of course be in a position to trade back up to the 1%. It may not necessarily be these exact rules, it may be something different, but think in terms of money management. That's very important. So those are my 3 tips for position sizing, and leaves me to say only until the next time, stay disciplined, follow your trading plan, and trade like a master. Bye for now.